Welcome back to the online tutor, the one place that turns questions into answers. In our last video, we used pick and pay as an example because we like to use real day examples in our illustration. So we used pick and pay as an example and we asked, how does pick and pay value its inventory on the shelf? How do they know how much the goods on the shelf is actually worth? Okay, so we touched on key concepts such as opening stock, purchases, closing stock, as well as customs or imports duty. For the link to this video, please find it linked above. But in the last video, so part 2 of that series, we then introduced two key concepts, which is perpetual and periodic systems. Okay, and we're just going to go a little further from what we spoke about last time. Okay, so I'm going to create a new page and we're going to go into it together. So let's try draw the table. So first we've got our perpetual, and again, like we said last time, perpetual. There we go, spelling things incorrectly. Perpetual system, as well as periodic system. Periodic system. Okay. So let's look at it together. So we said before that perpetual, the name gives it up as a system, perpetual, redundant, repetitive, continuous. Yes, it says like its name gives it up. It happens continuous, perpetual. So if you forget, say the word perpetual. It's repeating, so it's continuous. It always is calculating. It's constantly calculating. Okay, so we said a perpetual system. Accounts or values. Accounts/values. Inventory. Continuously. Again, if my spelling is incorrect, this is accounting, not English. Jokes. But let's not focus on the spelling, okay? On real time. So when the transaction happens, basically. When transaction occurs. Another key thing that we spoke about perpetuals is that purchases and sales, okay, are also recorded when they occur. And cost of sales, which is a key thing. So cost of sales we'll abbreviate it to make it easier going forward. COS is calculated at any point in time. So if we do need the value of cost of sales, we can easily work it out because it's calculated continuously. So there's a trail on that amount. Okay. And then let's just compare this to periodic. So we're saying perpetual continuously is valued versus periodic. So you've got a periodic thing. It happens at a period, so a period of time. It happens at a point in time. So we're saying there is a period for maths, for instance. There's a period for English. There is a time for maths. There is a time for English. At a certain point in time, you will have a maths lesson. At a certain point in time, you will have a English lesson. There is a specific time. So it does not happen on real time. It is at a point in time. So how do we word this? So we're saying the value of inventory is calculated at a point in time. Okay, and because it's calculated at a point in time and not continuously, we're going to need things such as physical stock counts. Because we need to physically count, because there isn't anything that calculates for us. Physical stock count. Stock counts will need to happen for us to account for what is the value of inventory. So this determines inventory value. Determines inventory's value or balance. Okay, and we said with periodic, because we don't know what it is, there isn't a system that calculates it automatically for us. We then use this formula for cost of sales. Cost of sales, we said, is equal to, you can say it with me, opening balance plus net purchases. We said takes into account things such as drawings. It takes things into account such as returns, so net purchases. And then we said plus carriage on purchases. And then we said plus custom duty, things that come into South Africa, customs or imports duty. And then we're saying closing balance. And this is equal to cost of sales. What else can we add from this account? Or this information. So we can also add that Perpetual is used for things that you can easily recognize. So goods you can easily recognize. As opposed to periodic, which is for what type of goods? Goods that, so companies that trade in large volumes. Because then you don't need to calculate it every day. You can calculate it at a point in time. For example, if you sell cars, you can count on the floor. We only have 3 cars. But at the beginning of the month, we had 4 cars, meaning we sold 1 car. So companies that trade in large volumes. Okay, so not trade in large volumes, but sell in large volumes. Trading in large volumes or low value goods. Trading in large volumes. Company trade in large volumes. Okay, and then we can also say, what else can we denote from here? This is also, so we're saying additional costs for Perpetual. So any additional costs, okay, are things such as carriage on purchases, and this is debited to our trading stock. As opposed to our periodic, any additional costs, so such as, so again, additional costs are recorded as expenses. Okay, so our periodic system uses what account? Our periodic system uses our purchases account, versus our Perpetual system, which uses our trading stock account. Okay, so these are our key differences with our periodic versus our Perpetual system. Does anything not make sense? Please feel free to jot that down in our comment section. And our community online, as well as ourselves, will go about answering your question, making sure you do secure those distinctions. It is bye for now, but please stay tuned for the following parts, which I believe is part 4 of this inventory valuation series.